I'm going to talk about why it is very important to focus on cash flow when you are investing in real estate. So, in real estate investment, there are three important profit centers. So, there is the cash flow. And what is cash flow? Cash flow is the amount of money that remains after you pay down your mortgage, you have paid down all your expenses, the rent that you receive, and you subtract all the expenses, you have the cash flow. So there are three profit centers. So the first one is cash flow. So you need to have cash flow, and cash flow will enable you to hold the property long term. So I tell people, focus on cash flow. So that is the first profit center. The second profit center is the mortgage pay down. As your tenants pay their rent, you use part of the rent to pay down your mortgage. And so eventually, let's say after 25 years or 30 years, depending on your amortization, your mortgage is paid down completely. And so you have a property that is free and clear. So you can imagine if you bought a property for 400,000 and the 400,000 has been paid over 25 years by your tenant, you have it for your use. Now, the other profit center is appreciation. Now, this is something that you cannot control. So a lot of people who are speculating purchase properties for appreciation. And this is the wrong way to approach, because you cannot control appreciation. And properties may appreciate or not, depending on other external factors. And for me, what I tell my clients is focus on the things that you can control. You can control the cash flow, you can control the rent, you can control the expenses. So, but appreciation you can't control. So that is a bonus. If you are going to get appreciation, that would be a bonus. There are people who have been affected so much by the recent prices of houses going down. There are people who had bought pre-construction properties that and they were hoping that the appreciation would occur so that they could sell the properties before they close. And now, because the property values have gone down, the value that they had projected is no longer there. It cannot be supported by the appraisals. And so they are being forced to either come up with extra down payment, or sometimes if they cannot afford, they have to sell the house. So appreciation is something that is a bonus. I consider it a bonus if you are investing. So during downturns, let's say if the interest rates go up the way they went a few years ago, investments that have enough cash flow would be able to weather that high interest rate regime. And so for investors who invested wisely and invested for cash flow, they were able to keep their properties. The people who did not prioritize the cash flow ended up going back to their pockets to cover some of the shortfalls. And that is something that you don't want to do if you are an investor, because it means that you're not getting passive income at all. Now, what should you do? You should make sure that the rent covers the mortgage, the taxes, and the expenses. And also, don't forget to include the vacancy. If a tenant moves, sometimes you have a 1 month or even 2 months before you get another tenant. You have to consider that. And you also have to consider the capital expenses. So, what is the advice? Invest in properties that provide consistent rental income that is high enough to enable you to withstand the increase in interest rate. What are some of those properties that for me I feel are high cash flow type of properties? It is investing in things like student rentals, things like mid-term rentals, and also strategies like rent to own strategies, where the tenant is going to buy, your exit, and normally they pay higher than normal market rent in the area. So the strategies are there for you to get cash flow, but you need to have someone who can help you to identify those properties and do a proper assessment, so that you then don't end up having a problem when things do not turn out as you had expected, such as having high interest. So until next time, when you are investing for your legacy, focus on cash flow.